Hello everyone, and welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 19th of February 2024. Alright everyone, let's get into it. So I'm back after one day off, I guess. Like one day was the Friday technically off, and then obviously there was the weekend. I had a rug fuel on Friday, but I think it was a rug fuel that you all enjoyed because I put the episode with Eric live on Friday to make up for it, because I kept teasing you guys about that episode. And good news on that front as well, there's going to be another drive-through episode this week with Eric. It'll be out on Saturday, the normal time, unless I do another rug fuel, then maybe you get it sooner, but we're recording it Friday, so unless I do a rug fuel on Friday, my Friday, you're not going to get it till Saturday. But in saying that, I think that we want to make it more of a kind of collaborative thing with the community. So someone suggested taking kind of questions from the Daily Gwei community and answering them on the podcast with me and Eric. So if you do have questions, go to the Daily Gwei Discord channel, and there's an AMA series channel in there that you can ask your questions in, and Eric and I will do our best to answer them. We probably won't answer all of them. It just depends on time. And also one big topic this week that we're going to be talking about is how to take profits in crypto, because we spoke a lot obviously on the video about how bullish we are on ETH and how we think ETH is going to like 20k or 20k this cycle, and how long term it's going even higher than that. But crypto cycles, the crypto markets and all markets work in cycles, right? And if you can take advantage of those cycles, you can substantially increase your holdings without having to kind of put fresh capital in. And obviously you want to be able to take profits so that you can buy other things. Maybe you want to put a down payment on a house, maybe you want to buy a new car, stuff like that, right? So we're going to be discussing our strategies and how we kind of structure ourselves, and how we've structured ourselves historically. Eric has a lot of really great insights on that, honestly, but probably better insights than I do on it, because he's been around longer, and he is honestly legendary at calling macro tops and bottoms on the crypto markets. Like, it's actually scary how good he is at it. So I'm going to let him kind of take the reins on that when we do the episode this week. But yeah, you guys can look forward to that there. Now, of course, speaking of the ETF stuff, we had another kind of, I guess, couple of updates around the ETH ETFs over the last few days. One of them was that one of the issuers filed, I think, an updated form to the SEC. That's not really big news, I guess. Like, that's expected at this point. But there was this tweet here from Nate Garachi, who is the president at ETF, the ETF store here, who quoted a Fox Business article from Eleanor Terrett here, who is one of the, analysts at Fox Business who covers, or journalist, I should say, who covers a lot of the ETF stuff. The quote in the piece was, "The SEC will be hard-pressed to come up with a new argument for denying a spot ETH ETF when the same factors in the spot BTC ETF approval are also at play here." And the reason I bring this up is because this is a narrative, and this is something that I've been saying for a little while, and I'm glad that other people are saying it now, because it really kind of like makes me question why people are so bearish on the ETH ETF. For all intents and purposes, they're basically the same products as a BTC ETF, and the ETH ETF has the same kind of factors at play, such as the fact that ETH has futures ETFs already, and BTC had futures ETFs, and then basically a court ruled against the SEC in the Grayscale case, saying, hey, why did you deny the spot ETFs if you approved the futures ones when they're basically the same product, 99% the same product, and then a few other things obviously falling off of there. And I've also seen a lot of people talking about, I guess, like the two main bear cases for, or at least like the two main things people seem to point to when they're kind of, well, actually there's three. Okay. I'm thinking of more than three, but I think I'm going to bucket it into three main kind of cases people give in terms of the bear case as to why the ETH ETFs won't be approved by May this year. So I'll give all three of them. The first one, first and foremost, is people think that they'll be denied simply because Gary Gensler and Elizabeth Warren and the high-ranking Democrats, they hate crypto, and they will begrudgingly drag to approve the BTC ETF, so they're not going to approve the ETH ETF one as well. I don't think this argument is necessarily a weak argument. Like, I get where people are coming from, but I don't necessarily think it's a strong one either. I think it's like a coin toss at this point, whether they kind of like approve or deny based on that reasoning there, because I can see both sides of it, right? But at the same time, it just depends on if the SEC wants to open themselves up to lawsuits again. Because if they deny, and their denial is based on basically, wishy-washy logic, which the SEC has been using for quite a while now against crypto, and you can bet your ass there's going to be lawsuits out the wazoo towards them. Now, do they want those lawsuits in an election year that is really critical for the Democrats? Do they want those lawsuits when there's actually now a crypto-friendly Republican, competitor for Elizabeth Warren? So he's running against Elizabeth Warren. Do they want those bad headlines against her? when there's that happening. So it's very political. And I would argue that this is potentially even more political than the BTC one, right? But that's kind of how I view that there. But I understand both sides of the argument on that point. The second point is people bring up this poly market prediction market here. So they say that, well, the poly market prediction market has ETH's chance of an approval by May 31st for an ETF at 42% right now. And it's been trending down. Originally, it started at like 80%, and now it's on Jan 10th, and now it's at like 42%. I actually wouldn't put much signal in this, guys, to be honest. I mean, the whole idea of this is that it moves over time. Like, it's not a binary thing. You can buy yes shares now, and then you can sell them at like 50% if you want, and you would still make a profit. That's the whole point of a market like this. It's not a kind of a binary bet where you're saying, okay, well, these are my numbers for the lottery, and you buy one ticket and that's it. And if you want to have more chances of winning the lottery, or if you want to change your numbers, what you do is you go buy more numbers, right? You go buy another ticket. So it's kind of different in that respect there. But I wouldn't put much signal in this. We're still 3 months out from the ETF, from that date, basically, or a bit over 3 months out from that date at the moment, which may not seem like a long time, but when it comes to these kind of things evolving and changing over that time, I could see this trend up just based on, even the smallest amount of news. So let's just say the SEC is seen kind of like speaking with the issuers or talking with the issuers about the ETH ETF. That would immediately, in my opinion, make this yes chance go from 42% to at least something like 60% or something like that. Because if you look at what happened with the SEC talking to the BTC ETF issuers, which are the same issuers, right? But they talked to them. Everyone got more confident, right? Everyone got much more confident in these things being approved. So I think that the prediction market isn't much of a signal right now. I think that the bet size is actually quite small too. It's $1.3 million bet size right now. So yeah, I really do think that the next 3 months is gonna have this basically trending up, to be honest. I mean, I haven't bought any shares or anything like that. If I'm going to bet on the ETH ETF approval, I'm just going to keep buying ETH, right? Like, that's my kind of logic to this. But yeah, if you want, if you're confident that it's going to get improved by May, then you could basically bet on this, and it should be, I'm not going to say easy money, but like, obviously, if you're right, it'll pay out nicely here, especially if you buy it now. But as I said, I don't put too much stock in this in these kind of odds right now. I do think we were going to get a lot more signal over the next month or so, definitely, around the ETH ETF, maybe the next month or two, I guess. But yeah, that's the second thing that I've seen people point to, and I really don't put much stock in that. The third thing, which I don't really put any stock in, is people saying, well, the ETH discount is still like 15% or 14%, whereas the GBTC discount was trending down, it went below 10% when BTC was going to get an ETF. This is just flat out kind of not looking at it. I mean, I'm not going to say it's flat out wrong, but it's actually not looking at the timing correctly here. Now, I would bring up the charts of the discounts, but I don't have them in front of me right now because the site is like paywalled or something. But I looked it up before and I was able to get the numbers for you guys. So GBTC and ETH are Grayscale's products, the ones that they want to convert from closed trust to the open, obviously, ETFs that they converted. They converted GBTC already, and they want to convert ETH as well. GBTC didn't trade under a 10% discount until a month before the ETFs got approved, or at least like 5 weeks before the ETFs got approved. So it was the beginning of December where I think it first went under 10% and started just going down only from there. And then obviously it's basically at 0% now because the conversion happened. The ETH ETF, I think maybe I can look it up on my other screen right now. So I should say the ETH discount, not the ETH ETF. The ETH discount right now is at, I'm just looking it up on my other screen. You can't see this, but it's, what is it, 13% right now. So that is already better than what BTC was before, at 3 months, at least 3 months before the final deadlines. The final deadlines, I think, are 23rd of May, the first final deadlines. So we're still 3 months out from those, and the ETH discount is already basically at 10%. So I really don't put any stock in that at all. People saying, oh, that's the market saying it's not confident in an ETH ETF. It's like, guys, there's still 3 months left, right? 3 months before the BTC ETF approval, BTC was still struggling to break out of 30K, and then we had the Grayscale win, and that's when it kind of never looked back. And then as we got closer, people got more confident. BTC price kept going up. The GBTC discount was collapsing. The prediction market odds were going up as well. I couldn't find a market I couldn't find any stats on what the BTC ETF prediction market looked like, over a longer time period. I could only go back to the beginning of December. But yeah, I mean, it's still too early. It's still 3 months away. Like, as I said, I know it doesn't seem like that's a long time, but that's an eternity when it comes to this stuff. We know that crypto can move really, really quickly, but it can move really, really quickly, and it can catch us off guard, and it can make us feel like it's been a long time. But I think that's what's going to happen going forward here. So I know I spent 10 minutes on that, but I felt like it was really worth just walking through everything here and walking through why I think that people are wrong to say that there's only like a 40-50% chance of these things being approved by May. I think there's a much higher chance than this. And as we get closer and closer, obviously people can up their odds based on new information, but I'm pretty confident they're going to get approved by May at this point, right? I mean, I think that because there's still 3 months left, and obviously because I'm ETH biased, my prediction has more chances of being wrong than my BTC ETF prediction did, because I got that one right, and I think there were still a lot of people fading that right up until it got approved. But I'm pretty happy staking my kind of reputation, or basically saying that I think they're going to be approved by May. If I'm wrong, I'll gladly admit that. I'm not going to sweep that under the rug, right? Like, why would I do that? But I'm pretty confident at this stage. And I think that, over the next, I guess, like maybe 2 months especially, we're going to see the confidence either go up or down based on movements within the issuers and the SEC. But honestly, I'm betting on them being approved by May here. But we'll have to see. Obviously, the price action right now is quite positive. Probably the price action is trying to front run the ETF approval, of course, but we'll have to see as we get closer to that. Anyway, I'm going to, I guess, like leave that one at that, because as I said, I've already spoken about that for 10 minutes. Just quickly here, Eric, as I said, like, we did the podcast on the drive-through, and I hope you guys enjoyed it. We're going to do another one this week. I just wanted to highlight this little meme that he has here where he's put like Larry Fink supply sync, and he's kind of got the ETH logos and Larry Fink's head like with a couple of sinks in front below it. I just thought it was a funny meme to highlight, and this was something that Eric brought up on the podcast, that BlackRock is just going to be a hoover up of ETH, right? And they're already doing it with BTC through the ETFs, and the same is going to happen for ETH here. And I think that's obviously something to be really, really bullish about. But anyway, going to leave that at that. Enough price talk for today. Moving on to some updates. So first off there was an Ethereum all core devs call that wrapped up last week that you can see a summary of. Tim Biko has his thread here. I'm just going to read out the summary, or the all core devs recap. So obviously Dencun is very close right now. It's coming, I guess like in three weeks or something, just over 3 weeks or something right now. It's obviously on the 13th of March there. So there are mainnet client releases starting to come out. So if you running any of the clients that have already been released, maybe you want to update, or maybe you want to wait until, maybe a week or two before to see if there's any more updates that come out there. There is a couple of updates around Pectra. I think we're going with the name Pectra now instead of Petra. I think I better get used to saying Pectra, even though it's really annoying to say. So they discussed many EIPs on the call, but didn't make any additions to the fork, aside from agreeing to move 2537 from considered for inclusion to included. And then they're going to spend the next few weeks reviewing the various proposals. And there was also an announcement about an inclusion list breakout, a call that happened, which I'll talk about in a sec. And they're also organizing an account-related breakout in the next week or so to discuss the various externally owned account or account abstraction related proposals more deeply, which is pretty cool that they're looking at this more deeply now, because account abstraction has been something that the community has been clamoring for quite a while here. Now, of course, I will mention that the inclusion list breakout session did happen, and there is a recap thread from Terrence here. I think inclusion lists are shaping up to be like the star EIP of Pectra. It's the one that you'll see a lot of people talking about. It's the one that seems to be getting a lot of attention from core devs, because inclusion lists are basically, I guess, like improve Ethereum's core value prop of censorship resistance. And I've talked about it before, and I've talked about how Mike Nutter has been at the forefront of this and put out a bunch of research posts and so on and so forth. You can go check them out. You can just Google for them, Google Mike's name, and then you'll find them. And you can also check out Terrence's thread here about this latest breakout session. And I just wanted to say something on this topic as well. When it comes to blockchains generally, and I've been thinking a lot about this lately, because people are always saying, blockchains are good for this, or blockchains are good for that, or they're not good for this, or they're not good for that. And I've just been thinking about like, okay, if the core value of a blockchain, at least my belief of a core value of a blockchain, or a layer one blockchain specifically, I should say, is that it is a root of trust, right? It is a settlement layer. then what is the most valuable property of a root of trust or of a settlement layer? Like what above all else, right? And I'm not talking about decentralization. I'm talking about the properties that basically make decentralization happen. So out of all those properties, what is the most important? And I think I've landed on, and I mean, I've thought this for a while, but I think that I've landed on censorship resistance being that property. Like, that is the core property. Now, if you don't have robust censorship resistance, I think that everything else breaks down, because you don't really have credible neutrality in that, if you don't have censorship resistance, because you can't claim to be credibly neutral as a network if there are certain actors being completely censored, right? Because obviously it's not, these networks aren't censorship proof, but they are censorship resistant. But if you have a network that is not censorship resistant, then that means that there'll be actors that just can't transact on the network at all. So you don't have credible neutrality then. And then you don't really have decentralization either, because it means that there's like a centralized point of, a point of failure there. Your economic security kind of counts for nothing, because like you're not offering you're not offering anything better than what a centralized database can offer in my eyes, right? In terms of what a blockchain should actually be for. And I'm talking about a layer 1 blockchain specifically, something that requires consensus, right? Not layer 2s and things like that, but something that requires consensus that is really slow, obviously, and really inefficient compared to a centralized counterpart. The only property that I think that you need to have, right, and the one that is non-negotiable, is censorship resistance. And that's why so much of the Ethereum roadmap is dedicated to improving Ethereum censorship resistance, because without that, honestly, Ethereum becomes a lot less interesting to me, because I'm like, okay, well, if people can be censored on the network, then what the hell are we building all this other stuff for? Like, all this other stuff feeds into just making the network more robust and more reliable. But at the same time, why would we bother with that if we can't even guarantee that every actor on the network can get their transaction included, even if there's delayed inclusion like we're seeing with Tornado Cash right now? So that, to me, is and always will be the core value prop of blockchains. And without that, you may as well just have a database. You may as well just have a centralized database. There is literally no point to having a blockchain if it is not censorship resistant, because you can do everything else more efficiently on a centralized database, where if you're censoring already, it doesn't really matter if it's centralized, because then, you're the same thing in my eyes. But I'd be curious to know what you guys think on that. But that, to me, like, after thinking about it for quite a while, and just like thinking through everything else that goes into making a blockchain, I really do think that a layer 1 blockchain has to have censorship resistance, or else it is pointless in my mind. But anyway, you can go give Terrence's thread a read about inclusion lists. I'll link it in the YouTube description below for you to do so. All right, so Geth is now down to 69% dominance on the execution layer client side of things. Now, this has been trending down for a while. You remember it was up at 90+%. There's been a big drive from the community to get Geth down below 66%. Especially before Dencun hits mainnet. It seems like we're going to get there. It doesn't even take Coinbase anymore for us to get there. It takes like maybe a few other smaller players to change over, and we'll be below 66%. Now, Honey Abu, the person who is responsible for maintaining this this website, clientdiversity.org, did point out that this info is basically based on, it's subjective info. It's basically them going out and asking each of these providers what percentage of Geth they're using, or relying on information that these staking providers have put out about what execution layer clients they're using. So it is not perfect. It does not have 100% network coverage, but it is probably the best data set that we have right now, honestly. Like, I don't think we have anything better than this right now. So in the absence of better data, I'm just going to go off this one by caveating it by saying that, it's not perfect. I mean, there's never going to be any perfect data on client diversity or anything like that. But it is the best that we have right now. So obviously 66% is that critical threshold that we want to get Geth below, but then we want to keep that up, right? We want to keep the pressure on. We want to get Geth to like 50% or something at least, because then it takes a lot more to get it back up to over 66%. If we only get it to like 65%, well, then it can very easily creep back up above 66% through no fault of anyone, just from people bringing online more nodes and just using Geth, right? It's the default client that they use. So I'm just really glad to see that it's obviously improved here, but we have to keep the pressure on. We can't just essentially kind of rest on our laurels now and be like, oh yeah, that's all sorted, we're good and proper. No, we need to keep the pressure on. And also Coinbase's deadline is coming up. They did say by the end of Feb they would have a basically blog post about what they're doing on the client diversity front of things. So if they do not meet that deadline by the end of Feb, I think that we should be kind of like putting the pressure on from there and tweeting about it, saying, hey, Coinbase, where we were expecting this by the end of Feb, where is it? Not like in a mean way. Don't just tweet at them and say, hey, what's the hold up? You said you were going to do it by the end of Feb and you didn't do it. What gives? Don't do it like that. Do it nicely, of course. But I think that We have to keep these bigger players accountable, and that's how we do it. So give them till the end of Feb. And reminder that it is a leap year, so there is the 29th of Feb this year. So give them till like the 1st of March. And then once that hits, if we haven't heard anything at all, then I think it'd be wise to kind of reach out to Coinbase on Twitter or maybe on Farcaster, or maybe you email them and say, hey, what's the deal here? I'll be reaching out to people I know as well at Coinbase personally to see if I can get an answer around this, because yeah, it definitely would make a lot of sense to keep the pressure on. But regardless of that, it is a very positive sign that Geth is almost down to that 66% threshold. So I'm going to keep you guys updated on that as we get closer to that. But yeah, it's just great to see. All right, speaking of Coinbase, Hildobby had a great little breakdown of Coinbase's kind of financials report that they put out in the context of how much ETH they have staked on the network. Now, Coinbase put out their financials report for Q4, basically, which was obviously a thing that they have to do now because they're a publicly traded company. Coinbase looks really strong, by the way, for anyone keeping tabs on this. I think that's obvious at this point. Coinbase is the main beneficiary from the ETFs, which haven't even played out in this data yet because the ETFs went live in Q1. They're also the main beneficiary of retail customers coming back, or any kind of new customers coming back or getting into crypto. They have a lot of things going on. I'm really bullish on Coinbase as a company. I don't own any coin stock. I couldn't, like, for me, I if I'm investing in crypto, I'm just going to invest in crypto. I'm not going to go buy stocks. I actually don't own any stocks right now. 0% stocks. Like, even my retirement account is all ETH, as you guys know. But honestly, like, Coinbase, I'm extremely bullish on as a company. They are just the premier, crypto-aligned company in the world right now. I'm also pretty bullish on Kraken too, mind you, but obviously Kraken isn't publicly traded or anything like that, so you can't go by, I don't know what their ticker would be called, Crack or something. That's a funny ticker, right? But I'm bullish on Kraken as well, but Coinbase is just killing the game right now for sure. I mean, they have their layer 2 with Base going on that's growing and getting a lot of traction thanks to things like Farcaster and so on and so forth there. But in the context of ETH staking, Hildobby dug into their report, and it shows that they're basically, well, at the time of this report, when it was published, they were staking $10.1 billion of ETH, or 4.4 million ETH. And I think that's gone up a bit now. I think 4.4 million ETH is worth almost $12 billion now. And he said, yeah, this deviates only by 0.007% from what Hildobby already had on his ETH2 staking dashboard. You know what? I can't use your dashboard anymore, mate. Like, it's off by 0.007%. How can I even trust this dashboard ever again? No, of course I'm joking, right? Hildobby's dashboard is the best dashboard for keeping up with all things staking on Ethereum. If you haven't looked at this yet, I highly recommend going and looking at it. I'll link it in the YouTube description below, but it has so much information on here, guys. I love this dashboard. I mean, I think I go to this dashboard at least once a day, if I'm being honest. Like, it's just such a fantastic dashboard, and kudos to Hildobby for the amount of effort and time he's put into this. But it's great to see that his estimates were right on the money. Only off by like a fraction of a percentage, right? Less than a fraction of a percent, like just basically a rounding error of a percentage here that he was off by. But at the same time, this also means that Coinbase is down to 14.2% of all staked ETH. Now, those of you who have been paying attention will know that Coinbase was up at almost 18% of all staked ETH back in the day. I think this might have been a while ago now, but they've been trending down since then. So Hildobby's dashboard actually will show you this, where if you scroll right down to the bottom, you can actually see the ETH staked by entity since genesis of the beacon chain, basically. And you can see Coinbase's share in the dark blue here. I mean, if you're listening to the podcast, you won't see this, but you can see in the dark blue here, their share was, I guess, like even up until recently, if I'm looking at it correctly, was 15% back in, what is this? I think it was May 2023, and now it's down to 14.2%. So it is going down. And why this is positive is because Coinbase, as I've said before, is one single entity, right? They're one entity on the beacon chain. They are the largest single entity on the beacon chain by far. The next closest single entity, and I know there are debates around considering Lido to be a single entity or not, but I'm talking about like a single entity in the function of being a node operator. You can see here that Coinbase is the biggest by far. Radar.network has Coinbase at 14.7%, but Hildobby has him at 14.2%. I think Hildobby's one is probably more accurate at this point, but regardless, I mean, there's only a few percentage points off there. But if you look at Coinbase as the single node operator, a single entity node operator, the next closest is Binance at 4.1%. So Coinbase is by far the biggest one. So getting Coinbase's market share to come down is obviously a priority here. And ideally, you'd probably want them below 10%, right? But that doesn't mean that they can't still keep growing on a real basis. They can still keep getting more ETH staked. I mean, they're at 4.4 million right now. That can increase up to like that can double or something, and their market share basically remain the same. It would just rely on obviously the other players getting in, getting more market share as well, right? So when it comes to relative market share, we want it to go down, but in terms of real market share, it's still probably going to go up because there's going to be more and more people who stake with Coinbase. Obviously, a lot of new people like to stake with Coinbase because it's so easy. A lot of new ETH holders, so nothing wrong with that. But I do think that there is one thing that will slow down Coinbase's staking operations that they may be able to offset with institutional staking. But there's one big thing, and that's liquid restaking tokens, because Coinbase has a liquid staking token right now, CBE, but it's not very popular to begin with, as opposed to other LSTs. And I really doubt that Coinbase is going to be able to delve into anything got to do with restaking for a little while here, especially because it's a regulatory quagmire and they're already being sued over their staking product from the SEC. So yeah, we're going to have to see. We're definitely going to have to see what they do there. But I do think they're going to bleed a bunch of market share to the liquid restaking tokens. And that's kind of, I guess, like healthy, I think, for the beacon chain. But I do still think Coinbase can offset that with institutional grade staking, because they're one of the only players that can offer that to the bigger institutions, because the bigger institutions are going to want to trust that, that their staking is in good hands and is with an experienced operator, but also just like normal retailer who have no idea about restaking. I'm talking about like the complete normie retailer who are like, I just need to buy some crypto because crypto is going up, right? Like that kind of retail. I don't think it's going to be the ones who are kind of aware of restaking. They're obviously just going to go buy LRTs or stuff like that. But anyway, as I said, you can go check out Hill Dolby's dashboard for yourself. Highly recommend doing so. We'll link it in the YouTube description below for you to do so. All right, so I had a question from Rui over the weekend in the Daily Gwei Farcaster channel for me to review the non-4844 EIPs that are going live in Dencun. And I did say that I would answer this question on Friday, but I missed Friday's episode, so I'm doing it today. So as you guys know, 4844 is not the only EIP that's going into Dencun. There are actually a bunch of others here that are pretty important, but honestly, pretty much all of them have nothing to do with end users directly. And that's the reason why I haven't actually been talking about them, is because, well, one, I mean, they're very kind of like in the weeds, and I'm not the best to explain these things to to people because I haven't done my research on them myself. And two, because they're not user facing, I just kind of thought it wasn't worth bringing up. But hey, someone asked, and I'm sure a lot of you are curious about it. So I'm going to cover not all of them, but the ones that I think that are probably the, at least a little bit relevant to you guys. And I'll explain why. So the first one on the list is actually a pretty old EIP. It's called EIP 1153. So this is very old, actually. This is all the way back in 2018. So this EIP is finally making it into the network, and what it is that it enables transient storage opcodes. Now, of course, as I said, this is developer facing. But the reason why this one is so important is that Uniswap v4 actually relies on this EIP to go into the network before it can be launched. And now, because this EIP is finally going live with Dencun, Uniswap announced that they're going to be launching their v4 in Q3 of this year. So that, in, I guess, like an indirect way, is user-facing. So yeah, I mean, you're going to be able to experience Uniswap v4 finally in Q3. So that is probably, I would say, the second most user-facing EIP as part of the Dencun upgrade. 4844 being the first most user-facing, obviously because it's going to directly lower fees on rollups where all the users are now. So yeah. And then there is another EIP that's got to do with 4844, which is 7516, which is basically just specifying, from my understanding, how the base fee will interact with blobs. So again, those two are just coupled together, so I don't think it's worth kind of talking too much about that. The rest of the EIPs, I mean, yeah, as I said, like they're very kind of like not user-facing and very kind of, I guess, directed at developers. If you want to learn more about them, though, there is actually an article that I came across from Third Web here that just gives you a quick summary of each of them, which I thought was really good. So I'll link this in the YouTube description below for you to check out. But essentially, it's just giving you like a one sentence description of all of them. I'm not going to read through it now. You guys can go check out the link for yourself. But like I read through them all on myself, and I'm like, okay, yeah, my intuition was correct. Like pretty much all the EIPs have nothing to do with the end users, very developer heavy. So if you are a developer, obviously this is probably going to be of interest to you. But for me as a non-developer and someone who really only pays attention to maybe one or two EIPs per upgrade, because it's just too much to pay attention to all of them and it's too much to follow all of them, I'm not going to be the best person to speak to about them, but you can go check the links out. I'll link them in the YouTube description below. But as I said, 1153 enables Uniswap v4 to go live. 4844 and 7516 all got to do with blobs, which lower rollup fees, and then there are a few others out there that are coming with with Dencun that are very developer facing, and I'll have an article linked in the YouTube description below for you guys to check out if you want to learn more about all of that. Finally, here, just a shout out that tomorrow, Tuesday, February 20th, I'll be doing an AMA on Twitter Spaces with Pawndale here about the Protocol Guild Pledge. So I'll be alongside, I think, Tim Byko or Trent Van Epps. I think that some scheduling issues there, so it's either going to be Tim or Trent Van Epps. But as you guys know, those two are at the head of the Protocol Guild, so either all works for this. Alongside a bunch of people from the ecosystem, such as Joseph from Pawndale, Mike from EtherFi, Cheeky Gorilla from the Protocol Guild, and Umid here from Tycho. So I'm really looking forward to this. As I said, it's happening February 20th, Tuesday, which is tomorrow at 1 p.m. Central European time, which is 11 p.m. Australian Eastern Standard Time for my Aussies out there. I think that's like early morning US, but it'll be recorded, of course. So I'll link it to you guys in tomorrow's refuel. Actually, no, in the refuel on Wednesday, because I'll probably record tomorrow's refuel before I do this. So yeah, you can go bookmark this. It's shaping up to be a really cool AMA all about the Protocol Guild Pledge. And for those of you who don't know, the Protocol Guild Pledge is basically asking teams out there building on Ethereum to basically donate 1% of their total token supply at TGE to the Protocol Guild. But anyway, there'll be plenty of questions and answers given on the spaces that is happening tomorrow, and I'll link this in the YouTube description below for you guys to bookmark. But I think on that note, that's going to be it for today. I've actually got to get ready for another podcast that I'm doing in a couple of hours with the Bankless guys and Jordy and Mike Ippolito, the two guys I did the ETH Bull Case podcast with. We're actually doing the podcast that I mentioned last week. It actually got pushed back to this week about the layer 2s and the bull case for layer 2 tokens. That's going to be really interesting because I can give a bull case for layer 2 tokens generally, but I can't give a bull case for each individual layer 2 token. And there's a lot of kind of things that go into that I'm going to talk about on the podcast. I'm really looking forward to that. But yeah, I got to get ready for that. That'll be out. Actually, I'm not sure when that's going to be out, but I'm recording it in a couple of hours. But anyway, that's enough rambling from me. I thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.